So we all talk about dollar cost averaging, right? It's that smart, disciplined way to buy into the market. We love it. It works. But what about the other side of the trade? Today, we are going to dive into the part that almost nobody talks about, the disciplined art of taking your profits. This is the other half of DCA, and honestly, it might be the most important.
Okay, so just to make sure we're all on the same page, DCA is that steady Eddy strategy. You invest a set amount of cash on a regular schedule. Maybe it's every Friday, maybe it's the first of the month. It's awesome for building up a position because it takes all the emotion out of buying and really smooths out those crazy market swings. It's a fantastic way to accumulate.
But here's the million-dollar question. Is that it? Is the entire game just about buying, and more buying? Look, accumulation is a great start, a fantastic one even. But if that's the only play in your playbook, your strategy is, well, it's dangerously incomplete. And that leads us right into something I like to call the paper profits trap. This is the absolute core of what we're talking about today. It's this huge danger of having a brilliant, methodical plan to buy, but zero plan for when or how you're ever gonna sell. Think of it like this. On one side, you've got paper profits. They look amazing on your screen, right? But they're just theoretical. They're not real yet. And they are completely at risk. Then, on the other side, you have realized wealth. Now that is concrete. It's secured. It's actual profit that you've locked in and preserved. Until you move your money from that first column to the second, those gains can just poof, vanish in the next market downturn.
And this quote just hits the nail on the head. It says that by neglecting this second phase, the selling part, you leave yourself wide open. All those incredible gains you watched pile up during the bull run can flip into devastating losses, all because you didn't have a plan to cash some of them out. It's a really painful lesson that a lot of people learn the hard way.
So how do we avoid falling into that trap? Well, you fight discipline with discipline. This brings us to the solution, planning your disciplined exit. It's time to build the second half of your strategy. Now, let's be super clear. The goal here is not to become some market wizard who can perfectly time the top. I mean, that's a fool's errand. No, the goal is to take the exact same logic that makes DCA so powerful for buying and just flip it around for selling. We want to get away from making those gut-wrenching emotional decisions and move toward a calm, pre-planned, systematic execution. And this powerful strategy has a name. It's called Reverse DCA. It's pretty much exactly what it sounds like, and it is the key to finally completing your entire investment cycle.
So just like regular DCA has you buying in chunks, reverse DCA, or you can call it distributed selling, has you selling in chunks. The absolute key here is that you decide on your selling price targets way in advance, when your head is clear. This strategy literally forces you to take profits and lower your risk as the market gets crazier and more euphoric. It basically saves you from your own greed.
And you know, the best part is how simple it is to actually do this. It's really just 3 steps. First, you set your price targets when things are calm, not when you're feeling all euphoric. Second, you decide how much you're going to sell at each of those targets. Maybe it's a fixed amount, like $500, or maybe it's a percentage, like 10% of your bag. And third, this is the most important part, you just execute. No emotion. When your price target hits, you sell. No hesitation, no second guessing. So here's just a really simple example of what a plan could look like. Let's say you decide that once your investment is up 50%, you're going to sell $500 worth. Boom, you've taken some profit, you've de-risked a little. Then, if it keeps running and hits a 100% gain, you sell another $750. And if it goes absolutely parabolic and you're up 200%, maybe you sell 10% of whatever you have left. See? You're still in the game, you're still participating in the upside, but you're consistently turning those paper profits into actual real wealth. Now, beyond all the financial mechanics, probably the single biggest benefit of having a plan like this is the incredible psychological advantage it gives you. It's a total game changer for your mindset. Because without a plan, we all fall into these mental traps. We've all been there. FOMO screams at you not to sell because what if it goes higher? Then there's anchoring bias, where you get stuck on some crazy high price target in your head and you end up riding the asset all the way back down. And of course, having no plan is what leads to panic selling at the absolute worst possible moment. But with a reverse DCA plan, you just get to sidestep all that drama. You've got a system. You execute without emotion. And best of all, you get tangible proof of your success. You see those realized profits hitting your account. And that capital is now safe it's preserved, and it's ready for you to use in the next market cycle, which gives you a massive, massive edge. So when you put these two strategies together, buying and selling, you finally evolve from just being an accumulator to being a true full-cycle investor. You're building a complete professional game plan for the entire journey. Let's just put it all together. You have systematic buying with DCA, and you pair it with systematic selling through reverse DCA. This combination isn't just a good idea, it's really the gold standard for long-term success. This is how you manage risk, this is how you lock in returns, and this is how you navigate these wild markets with confidence.
I really want to end on this quote because it just captures the whole idea so perfectly. DCA isn't some perpetual motion machine that only goes in one direction. It's the initial phase of a much bigger plan. And that second phase, taking those profits, is what turns the whole thing into actual wealth. So I'll just leave you with this one question to think about. Take a hard look at your own strategy. Is it just built for the ride up? Or is it a complete, robust plan that's built for the entire journey? Thanks for tuning into this explainer.